Hello, everyone, and welcome to another edition of The Pitch presented here by StockCharts TV. One of my personal favorite shows that we do, so much fun. We bring on 3 different analysts, each bringing 5 picks to the table, running us through the charts, talking about the current climate, and highlighting some of the ideas that they have for the current market conditions. My name is Grayson Roze, Vice President of Operations here at StockCharts. Again, so good to be with you and so good to be with our 3 analysts that we have with us today. Now, we're going to run through the format of this show in just a minute. Going to highlight some of the changes actually that we're bringing out with this month's episode. But before we do that, I want to bring on some of our guests, talk to you about their backgrounds. We have a fantastic lineup today. So first and foremost, I want to welcome Greg Schnell, Chief Market Strategist at gregschnell.com and a longtime partner of ours. Greg, thank you so much for being here. How you doing today?
Really good. Thanks, Grayson, for the invite. Look forward to having fun. Jay and Mark with me.
Yeah, and we got a great group here. Next up, we have Jay Woods, Chief Market Strategist at DriveWealth. Jay, so good to be with you. I always think back to our time on the floor at the NYSE, but so good to have your picks on the show today. Thank you for joining us.
Yeah, it's great to be with you and this esteemed panel. I haven't seen Mark in ages, back to when we were on the floor together for that nice period of time. So it's good to see Mark and of course Greg, and to be with you. It's going to be fun.
Yeah. And finally, we have Mark Newton. Mark is the Managing Director and Global Head of Technical Strategy at Fundstrat. Mark, so good to be with you. A new position. I love the background that you got here. I love that this group has some great synergy to it. But Mark, welcome to the show. Thank you for being here.
Yeah, thank you, Grayson. It's great to be here today, and love to have the chance of talking again with Greg and Jay Woods.
Yeah, always. We're going to have some fun today. So as I mentioned, I want to run through the format of this show just a little bit because this month is actually going to be slightly new. So in the past, a little bit of background here, we've done actually one presenter at a time. So like I mentioned in the open, each presenter is bringing 5 charts with them today, 5 picks for the current market. And in the past, we've had them run through all 5 of those at once, sort of in a group. This month, what we're going to do is actually something a little bit different. We're going to break up the show into 5 different rounds. So each of our 3 presenters is actually going to show 1 chart per round. So we're going to go Greg, Jay, Mark, each sharing 1 chart. Then we'll go back for round 2, each presenter sharing their next chart. The final pick is actually going to be a special one. We've asked each presenter to bring with them 1 short idea. So we're going to have a lot of fun today, looking at some longs, looking at some shorts, and a little bit more fast-paced this time around as we go through 1 chart from each presenter at once. So we are going to get right to it. We've got Greg Schnell first up. Greg, I am going to get over to your first chart that you've brought with you and give you the mic. You've got about 90 seconds. Talk us through your first idea, which is Etsy.
Yeah, one of the things I like here is the consumer discretionary group is really starting to break out. I like the look of that whole area. And my wife was looking for some stuff for the kids the other day. And I said, oh, I'd find that on Etsy. And it was just kind of funny because it made me go look at the chart. I pop up the chart and sure enough, breaking out to new highs. Just heading into the 4th quarter and 1st quarter, which are typically really good for retail and consumer discretionary. So I like the look of the chart here. I like the way the PPO momentum indicator is starting to push to higher highs. It did a touch and go here just in October where it pulled back and then started to break out. Up at the top of the chart is my scooter ranking. The stock is one of the top performers against all its large cap peers. It's up in the 90% level, so that's pretty awesome. The purple area on all of my charts is always the relative strength compared to the SPX. I like to call it the Spurs, SPX relative strength. And then that's pushing up to new highs here. So I really like that look, a 6-month high. And then you've got the full stochastic clearly up in a big high push here, but as you can see on the left, it can stay up there for a year. So as long as the the chart continues this sort of shape, I expect it to do pretty well heading into what we've got left for 2021.
It's a great pick. This is a great chart. I mean, pushing to those new highs and everything, just a beautiful move here from Etsy. Greg, I love what you're talking about. We are going to move on to Jay's first chart. Jay, your first chart is the transportation ETF, XTN. What do you got for us on this chart?
Yes, it's not the sexiest of charts. I do like the Russell, the IWM, the mid cap breaking out, and I like watching the small caps. But this one has my eye because from a risk reward setup, I think we're at a very good point. Basically, you have that resistance line going across the top of the nice little saucer bottom. Those rounded bottoms are always something that technicians like to really focus on. And we try to break through. We're pulling back, is still in a near-term uptrend. So maybe you want to use that pullback as an entry point. But where I think you can really see the momentum come as we come into the seasonal time period towards the end of the year is a break above 92. So what we're watching is to see a little momentum, a break and a close above 92. And then you can establish a risk reward. You can set a stop right under that, hope that old resistance becomes support. And then you see a nice move as the stock can run, November, December, first month of the year, towards 100 or a little bit higher. Right now, the transports are leading. The good thing about this sector that I like, it's 50 different holdings, so it's bigger than the transportation average, but it's more truck and rail, less airlines. And to me, if I was to break down those three groups, the truck and the rail look a little more appealing than the airline. So right now, first pick is XTN.
I like that. Certainly a lot of strength coming out of those, trucking and shipping and all that stuff. Great pick, great chart there. I love that move up to those new highs. Jay, we're going to move on to Mark's first chart. Mark, you brought an interesting one right off the bat. We've got Ethereum. What are you seeing on the chart of this pretty major crypto here?
Thanks, Grayson. So I think Ethereum is really one of the best risk rewards right now amongst the cryptocurrency space. Many people are concentrating on Bitcoin. That has already had a very good move in the last few months. Ethereum is just now starting to play catch up. And you just look at the chart and what it's done since May, and we formed what I view is to be a large cup and handle type formation that's just now starting to break out above its former monthly highs. You've had a little bit of weakness even in the last couple of days, which makes this even a better risk reward in my view. I look at a lot of different charts, relatively speaking, of Ethereum versus Bitcoin and the Ethereum dominance index, and all of those start to show Ethereum gaining speed over the last couple of weeks. So I like this as being a great risk reward, and above 4,100, I think you can add to longs, and we should see a move up to above 5,000 or so in the months to come. So that's my view.
That's beautiful. This cup and handle, I mean, we're always looking for the perfect cup and handle, aren't we? And this is a pretty beautiful example of an incredible cup and handle pattern here. I love to see that there, Mark. Greg, we are going to go back to you. That actually brings us to the end of, I guess we'll call it round one here. Everyone's first pick done in the books. I got one question for you, Greg. We're going to actually go back to your second chart. But one thing maybe that we could highlight in this round, you talked about that scooter score. I wanted to ask you, what is that line going across the top? I want to make sure that people understand that line that you have drawn across the scooter panel. Maybe something to highlight here as you're talking about your second pick, which is Broadcom.
Sure. So maybe I'll just focus on that just to start. So the scooter ranking is basically a sports ranking for stocks. It compares the percentage moves up all the time and where the stock's position is relative to its averages, its moving averages. So when a stock is above 75%, it's in the top quartile of all of the stock price movements. So it's a really quick way to just say, am I betting on a loser? No, I've got something that's really working here. So the scooter ranking is important to me. I like to look at it. I either like it breaking above 25 or breaking above 75. And basically, if you're stuck in the kitchen where it's just wandering between 25 and 75, you've got an average stock and you're probably in line with the S&P 500. So for Broadcom, I think the big thing here is it's been basing all year, just making a nice sideways base, and we're on our second week of the breakout. This is a really explosive stock. I think it's got lots of room to go to the upside. And again, as part of tech rolling out 5G and all of the other advancements that we continually have, I think Broadcom is a big way to play this. We just got a buy signal on the PPO again. So it's kind of like a first one, a pullback, and a second buy signal. You can see in the Zoom panel there. So I like the way the chart sets up. I just think it looks like it's ready for higher highs.
Yeah, I mean, another beautiful breakout here within a longer term uptrend. I love the setup on Broadcom too. That makes a ton of sense. And to see some of that relative strength, to see the scooter line getting above that key 75 level that you're watching, that makes a ton of sense. It's a great chart, Greg. We're going to move on to Jay's second chart. And Jay, we've actually got a couple of charts for the same symbol. So we're going to start here on sort of the narrower term view of the broker dealers and securities exchanges ETF. What are you seeing here in IAI?
Yeah, this is one that's near and dear to my heart, being in the financial industry, working at the exchanges. This is made up primarily of the large cap banks. In fact, 40% of the index itself is Morgan Stanley and Goldman Sachs. So if you want to break it down, you look at charts of those two individual names and you see that they're near all-time highs, just retreating from all-time highs and in strong uptrends. We like that. And then you look at the exchanges themselves, ICE and NASDAQ, both breaking out, both strong. And then we look at this, how it's performed over the year. It's taken a step up, it's pivoted, it's held, it's based, and we see it just broke out of a base. So, you know, we're a little late if we're jumping in now, but it's retracing a bit. And this looks like a retracement that needs to be bought. A lot of this will tie into a rising 10-year yield. A lot of this will tie into rising volumes, which seasonally, we're in that period where volumes are tending to rise. Seasonally, we're in the strongest period for it. Now, while we have the other chart, if you want to go back just another 6 months from this year-to-date chart, let's look at what it did at the end of last year. Now, obviously, we can't anticipate a move like this, but it basically was going in a sideways range, broke out on a gap, kind of like we see now, right around the same exact time, and it ran into year end and a little bit into the beginning of the year. Now, that was one heck of a move. The index is up 46% year to date. But right now, given all the seasonal factors, given that the 10-year is still strong, and to me, looks like it may rally above this 1.75% over the next 2 months, I think this is a space you need to be in and buy on weakness.
That gap and go move from the end of last year, that's just phenomenal. But I mean, to compare that to what we're seeing this year, I love that sort of multi-time frame view that you're bringing in there, Jay. One quick question, just while I have you on the screen here, does that overweighting of Morgan and Goldman kind of scare you off from this at all, or is that just the way it is and you're loving the price setup and you're still in it?
No, whenever you look at index funds, you want to see what the highest weights are. Some of them are diverse equally amongst the components in the sector. Some are not. We can go through the main 11 spider ETFs and see the weighting in Amazon and Apple. And you know that you want to be where the good names are. And when you break it down, you want to look, okay, well, it's 40% two stocks. Let's see what, 46% in this case, I think. You want to see where the strength is and if they're looking to lead. And right now, it looks that way. So that just reinforces your thought on the chart of the ETF itself.
Yeah, makes sense. We're going to move on. Mark, we've got your second round chart coming up here. You have an ETF as well. We're looking at the FinTech ETF. What are you seeing on this name?
Yeah, thanks, Grayson. So this is one of my favorite of the FinTech ETFs. There are a few of them out there. But the one from Global X does have large rankings and things like Affirm Holdings and Upstart, Intuit, Fiserv. So to echo what Jay said, I mean, it's really important to sort of know what you own, as a lot of these ETFs have higher rankings in various stocks. This one, I love the chart structure, and similar to the one I just presented in Ethereum. I mean, this has a large cup and handle pattern where we tested the highs back in February, we retested. Now just a very short, quick retracement, and now it's right back up towards former highs and consolidating up near that level. So, it's more of an intermediate term long than it is a short term buy it for immediate gains in the next few days. But it's something where, I love to see the continued strength in something like this. And it's more of just a structural technical long, and that's really why it's attractive. It has more to do with just being a good risk reward than finding something where we're seeing breakouts and momentum or acceleration. And it's, I love buying something like this. It's already tested, multi-month highs once, and now is moving back up to try to take out former highs.
It is. Yeah, I love the setup on this too. I mean, that sideways trading action, testing that top a couple of times and now trying to solidify the breakout. That's just a beautiful chart there, Mark, and a great space too. And I love that you're both bringing up, the actual components on some of these ETFs. That's great stuff. We are going to move on to our third round. We got to keep rolling here. We're back to you, Greg, and we are coming up on Agnico. We are looking at a gold mining opportunity right here. What are you seeing on this chart?
So this one is a good example of things I like to look for. So I like to buy and trade commodities. I like because they swing a lot. You buy them low, you sell them high. And what I like about this one, it's just starting to break out of that downtrend. I'm a big follower of the PPO momentum indicator at the very bottom, and you can just see that it's had a 1-year downtrend in momentum. And a lot of times when that breaks, I find that it just so happens that there's a lot of institutional change that starts to happen. If we go look at the railway chart, it's been pulling back for a while, and all of a sudden it pops to the upside. And I think you saw the move in CN Rail and CP Rail this week. They were big. So as the charts are breaking out, this is something I like to look for, is a big long pullback on the PPO. And the PPO is like the MACD for people who don't use it. It's a percentage oscillator rather than a price-based oscillator. And so everything else, though, looks pretty ugly yet because we're living at the bottom of the trough. So the Scooter ranking is just moving above 25%. I'd like to see that accelerate a lot higher. And then the relative strength still hasn't kicked in yet, so kind of watching and waiting to see that. But I would draw a line off the October highs all the way down to the current price. And as we start to see this lift that I'm hoping Thursday, Friday, and into the Fed meeting next week, we'll start to see some more price action coming into the golds. So that's the reason I like it here.
Gotcha. This is a great chart too. I mean, a little bit different than the other two that we're bringing to the table, but I love the walkthrough, especially there on the PPO, talking about that. A fantastic indicator, by the way. A lot of us use the MACD, and the PPO is basically just a percentage version of that. I love that you're highlighting that, Greg. Thanks for the explanation there. Jay, we're moving on to you. We've got your third opportunity here, and we're looking at another ETF. We're looking at EWW, the Mexico ETF. What are you seeing here? You got another two charts.
All right. Well, this first chart doesn't really tell the story, and let's talk about the first chart before we go to the second one. Okay. I was going to talk about Canada in honor of Greg, the EWC, which did break out to new highs and looks pretty good on this pullback as an opportunity to jump in. But let's focus on Mexico. There's a clear line in the sand here at this $50 level. We've seen it break out above it in early September, and then you had that engulfing candle and reversal. And sometimes from these head fakes, you get big moves in the opposite direction. We did, and then we got another candle which give you a buy signal right back to that 50 level, and we get there and we pause. So I am watching this closely. This is one of the stocks that if it goes above 50 and close above 50, you can buy it and you can have a stop to manage that risk. Now let's go back in time. Let's see where we're coming from in Mexico, because these are not all-time highs. This is what gives me the bigger perspective on it. This is a chart going back to 2002 on the weekly basis. We just broke out. We had the COVID scare in that circle there where it got decimated like everybody else. But our market, Canada's market, we're back above those COVID levels and making new highs. Mexico's got a long way to go. And the upside is kind of defined once we can get above that 50 level and hold. To me, you're going to make a run to 53, which is not much of a run. It's not sexy, but for a long-term investor looking for another avenue, another place to go, another country of strength, I've seen it. And working at DriveWealth, they've gotten to meet a couple of Mexican companies, and their interest in finance is just starting to come to fruition. The people at FINX and GBM are fantastic. And I see that once this thing gets going, we're going to be going to all-time highs like many of the other established markets are. And that's, the 2013 high above 60 to 65. So when I put it in perspective from looking at, okay, right now we're in that lull, but if we can break above 50, we got some room to run. And this is why I like Mexico over a long term.
And you're talking about, those head fakes and the big moves that can come from them. This is one heck of a head fake on the longer term chart. Basically an entire year there. That's pretty incredible. Jay, I just got to say, I love that you're bringing up the multi-time frame analysis, really sort of going back into history and looking at the longer term view. That's phenomenal. Thank you for that. We are going to move on to your next chart, Mark. I already know I got an important question for you coming up at the end of this one, but what are you seeing here on Intuitive Surgical, ISRG?
So this is one of my favorite stocks within the medical device space and healthcare and medical devices, and typically is one of the strongest areas right now in healthcare. The whole group had sort of a tough show in the month of September, and it's rebounded pretty remarkably. So this stock has been up about 6.5% over the last 3 months. Is up over 27% year to date. I like it for a couple different reasons. We just broke a trend going back over the last month and a half. And I think that initially is important. Also, when you just look at the wave structure of the move down from early September, I think it's interesting that it's been very choppy and overlapping. Typically, that's a telltale sign for me that finally, when we start to see that move back higher, that it likely is going to push back to new all-time highs. So I do think this is a good risk reward in the space. It tends to be a leader in the space. Some might say, weekly momentum is starting to wane a little bit based on the deterioration in September, and I don't disagree with that, but this has come back in a very good fashion. So I think this is one you want to own within healthcare.
That's beautiful. Yeah, I'm also drawing a line across here, sort of with my eyes at that 320, 325 level, kind of pulling back to that. Tested it a couple times. This is a great chart. If we can make the move above there to new highs on Intuitive Surgical, ooh, that's a nice chart. Mark, I want to ask you. You've got 3 different spaces here. We've got a crypto up first. We have an ETF up next. Now we're looking at an individual stock. So just really quick to kind of pause the conversation. How does your approach differ across those 3 opportunities? What changes as you're looking, to actually execute a trade in there? What changes in your process?
Yeah, it really is more about finding things that already are showing pretty substantial strength and are trading at or near the highs, 52-week highs, and then oftentimes, I like to look at things from a risk reward basis. So it's not necessarily something that's as stretched and as high, but it's something often that takes a pause for a number of months and then starts to emerge again and show that leadership. So that's really, what makes me, constantly look at top performing stocks on multiple time frames and find when they're starting to make structural improvement again that will help them, get back to that top leadership area.
Yeah, I love that word, structural improvement. Oof. Man, you're speaking my language. We are going to get on to our 4th round here. We're going back to you, Greg. We've got ChargePoint Holdings. I will say one of the only opportunities that was up on today. So good pick there to start. But what are you seeing here on ChargePoint?
What I like the most about this particular chart is the base that is sitting there. So this was a SPAC that broke out in September, took the whole meme run all the way up. And then January, February, a lot of them topped out. This one actually topped out late in December. And then as the stock has come down, it's tested this $20 level twice. It keeps coming down and holding. I like the fact that it's broken its downtrend. I've got a PPO buy signal turning up on the momentum indicator. My full stochastic is hitting a buy signal. I have a relative strength trend line that I should have drawn in there off the December high coming down. And if you can start to break your downtrend and relative strength, I think that's really helpful. That's right, like that one. And so getting through there, I think is a big area to look for. What the company does is they actually put up the chargers for charging electric cars. And I think that's huge upside, whether it's Blink or some of the other networks. But this is one that I really think has a nice structure on the chart. And again, if we start to go through here, I don't know where it stops because they're going to be in demand for a long, long time.
Yeah, I mean, it seems like we've seen this pattern actually kind of all over the kind of renewables EV kind of space. This big run last year, a lot of consolidation this year, but starting to pick up again. So this chart, to me, it kind of mirrors what's happening throughout that space, and I love the setup there. That's a great explanation, Greg. We're going to move on to your 4th pick, Jay. You've got another 2 charts for us. Is that correct?
Yeah, I like to put these in perspective. I think this first chart's pretty good too, but this is the Crane Shares China Internet Fund, KWEB. This one has been trending on some of the chat boards and CNBC.com. It's Basically it's Chinese internet stocks. And, from a macro point of view, we're down 58% from the highs, 35% year to date. So what I want to look at, overall, it doesn't look too pretty, but I'm looking to see some sort of bottoming process. The macro issues are what brought it down. President Xi, I hope I pronounced that right, Xi, he was cracking down on his own companies, whether it was the DDIPO that they ripped apart, Jack Ma just disappearing, although I heard he came back, but we haven't seen him. The Ant Financial IPO. I mean, we can go on and on, but there have been a lot of factors that have been really disrupting shares in China, and now we're starting to see some strength. And I also saw in a note from Arthur Cashin that don't be too put off by the Chinese Olympics. The Winter Olympics are coming up in China, and they want to perceive some strength. And they may be done talking about their markets in a negative way right now. And if Art Cashin says something, I listen. But let's just focus on the chart, because what we have here on this chart, we have pretty much a bottoming process. We have the low in August, just under 44 right there. And then we retested it and didn't break it at 44.5 back in October. And this breakout of the long-term downtrend on some volume, a nice gap is good. We're pulling back a little bit here. And this is where I get skittish. I'm looking at that $48 level, the gap up from the October low. I want that to hold. So if you're going to get involved, I would use that area as my first level to put a stop in. If it breaks 48, it could fill that gap. It could be problematic. But let's take a look at the longer term chart, which we have here. I put in some Fibonacci numbers. This is, for JC Peretz and his fan base. I'm not a big Fib guy, but I like to put them in to get a perspective of what kind of move and what kind of retracement we could be looking back at if we were to bounce. So I said we were down 58% from the highs. That's indicated from the Fib high to the Fib low level we measured here. We're holding that 42.5 level, which also happens to be the longest term uptrend line you can draw on KWEB from when it came into the market in the summer of 2013. So the long term still up. We're at that level we held. And now if we were looking for moderate risk with potential good reward, I think the setup is in our favor. We should be able to get back to that 54 level, which is about 5 points higher than we currently are. And if we make that other retracement, which would be back to the October, which would be to the 2018 highs around 65, and that Fibonacci retracement level at 38%, then we're looking at a nice move, and these things can happen quickly. So it's one that if you get involved in, make sure you set your stops accordingly. But from a moderate risk, high reward, I like the setup we have right now.
A heck of a move from 100 to basically 50, 40s, 50s. But bringing in that long-term perspective, I absolutely love that you're doing that, Jay. I know I mentioned it before when you were doing it, but just a beautiful set of charts there that you got. So we are going to move on to our fourth round pick from Mark. We're looking at Aflac. What are you seeing here?
So this is one of the more attractive stocks that I like within the insurance space. And this is a group that recently has pushed back to new all-time highs. If you look at things like KIE, the ETF, and Aflac really has been basing over the last 5 months. It hasn't done a whole lot, but the appeal comes from just in the fact that this is starting to move up and get above those prior monthly highs. And so from a short-term perspective, to me, it's always attractive technically to see former highs being broken, and particularly when you've already hit that level a number of different times. What really makes this attractive, though, is when you pull up the weekly chart and you see that going back over the last few years, we'd already hit that level once. We came back and now have been making a shorter base. So that's really, really key in this whole process as to why this is attractive. And so, it's not a perfect cup and handle pattern, but it's similar in the fact that we hit a former all-time high that hasn't been hit in a number of years, moved sideways for the last 5-6 months, and now are pushing back over that level. So has a lot of appeal to me when you start to see stocks like this make that movement.
I love that chart. I totally agree. I mean, going back and testing those 2019 highs, putting in that kind of range that we've seen this year, that's a beautiful setup there, Mark. I love the pick. Well, we are going to move on to our fifth round here coming up. And like I mentioned, this is going to be a little bit different because we've actually asked our presenters to bring to the table one short idea. So we're going to do that now here in our 5th round. After that, we're going to get into a little bit of discussion. We're going to come back as a group and have some conversation about the market, some of these individual picks, tons of different things. So Greg, we've got your short candidate up here, Fortinet. What are you seeing on this chart?
Okay, well, I think I don't like to short. It's much easier trading with the big guys. So I'm not a big shorter, but the one thing I would say on this stock, it's run from 100 to 350 in a year. So I think it's probably made the majority of its move. What I like is the PPO uptrend has stalled, and we're making a lower high on the PPO here as prices breaking out to a higher high. I think if this stays south of the breakout level, so below 310, maybe even if you wanted to just take 310 as a number because you're below the moving average there, the 50-day, that's probably enough for me. I'd also like to see that relative strength in purple start to crack. One of the things I like is when I pick a long-term uptrend for a stock, I want that relative strength line to start to break. So if it's not starting to underperform the S&P 500, I don't want to take the trade. I only want to, if I was to go short, and as an example, a Tesla short at 900 or a Bitcoin short at 65,000, I want that relative strength line to break, especially on the big picture if I was going to take a short position. So again, way outside the way I like to trade, but if I was going to trade, I want something with some big downside opportunity, and this would be the one that I'd kind of lean toward.
Yeah, that makes sense. I mean, a bit of an exhaustion move there, Greg. I like it. I can't say I'm the biggest short seller in the market either, but I do like what you're seeing here on this setup that's just run so far. I mean, that is quite the run here for Fortinet. Jay, you've got an opportunity here in front of you. What are you seeing here for the social media index, SOCL?
Yeah, this is, in the Halloween theme, one of the scarier charts out there. It's a very consistent downtrend going back to February. We have a nice pattern of lower highs and lower lows. It is at an interesting inflection point, but once again, from a risk reward standpoint, you can set your stops accordingly. And I would use any strength over the near term to probably sell the stock. What we want to see is if it can, go back to that October low and then breach it again. Someone may want to put a little inverted head and shoulders if we get a rally on this, and I say go for it. But right now, you look at the top 5 holdings, 40% are Facebook, Tencent, Snap, Google, and Twitter. I do love Google, but the rest of that group is suspect at best, especially Facebook. I know it's been beaten down. It's below its 200-day moving average, but it looks like it could go much lower, thus taking SOCL with it. The other thing that I dislike about this chart, or like if you're negative on it, it's trading below key moving averages. In the 200-day moving average at 67.25, and the 50-day moving average a little above 63. These moving averages have been points of resistance. If we get back to that 200-day moving average, it's right at the downtrend line. So that would be an area where if you wanted to enter into a short position, it could be a nice spot to go, and you set your stops accordingly to avoid any run up in it. And then if you want to play from the long side, there's the pivot point that I'd be looking at. But once again, it's defined from a risk reward. We're kind of in no man's land. So this is more of a scary chart than we got to go out and short it right now. I just say avoid. If it holds here, like I said, possible inverted head and shoulders. But if it breaks 60, then October lows are in play and they're there to be taken out.
And lower highs and lower lows. I mean, that's just clear on this chart. That makes a ton of sense, Jay. I love what you're talking about there. We are going to move on to Mark's 5th pick. Mark, your short candidate, IBM. We got 2 different views here on IBM. We're looking at the shorter term daily right now, but I know you've got a longer term view on this as well. What are you seeing here on the short play IBM?
Yeah, thanks. So this is probably one of the more disappointing stocks within all technology within the last decade. And the stock has really tried over the years, but just lately, if you want to look at short term, you see the fact that it attempted to move up and break out, and that recently has failed. It broke down under prior month's lows, and volume really exploded. That was the real telltale sign for me that structurally this is really starting to come undone again. What appeals to me is more how awful the stock looks on a weekly chart and a monthly chart going back since it peaked really in the year 2013. But so it's been really lagging over the last 8 years at a time when stocks have been going higher, and it's hit a number of different peaks up in that 140 to 150 area, and now just recently broke the entire trend from March of 2020, and as we talked about, did so on a huge spike in volume. So I think this is going to be range bound at best. One might argue that it is short-term oversold, but really looking at a time when technology has done so well, this company has tried to, reestablish itself. And unfortunately, technically speaking, I just don't think it's time just yet. It still remains a laggard and is one I would avoid and or short.
And that makes so much sense. We've had a market that's gone so far in the last couple of years, and you've got a stock here in front of you that has just gone clearly sideways. I love that you're bringing up the relative strength, the relative underperformance in this case of IBM, Mark. That's great to see. I want to thank you all for bringing these opportunities to the table. Some fantastic charts here, some things that are really catching my eye. I love to see it all. We're going to jump over to the summary page. I want to summarize all of the picks that we had from our three presenters here today. And then we're going to jump into a little bit of discussion. But Greg, from you, we had a couple of long plays with Etsy, Broadcom, Agnico, and ChargePoint. And then, of course, we had our short candidate in Fortinet. Jay, from you, we had a handful of ETFs, some pretty interesting groups in there. We had our transportation ETF, XTN. We had broker dealers in there as well with IAI. We had the Mexico ETF. Loved the long-term perspective on that Mexico ETF, EWW. Then we had the China Internet ETF, KWEB. And finally, your short candidate, we had the social media index, Social, SOCL. Mark, you had probably the most diverse group here. We had Ethereum first up. Love to see a crypto name in there. Then we also had the FinTech ETF on the long side, Intuitive Surgical and Aflac as well, a couple of individual stocks in there. And rounding out your five, the short candidate, we had IBM. So thank you all for sharing this. First up, as we kind of dive into some discussion, I'd love to chat about process, maybe touch from each of you on kind of your process of picking these. How are you finding these names? Are they scan results? Are they just kind of breezing through index components and stumbling across some of these charts? How are you finding some of these names? What's your process? Greg, maybe we start with you.
So I like to look for a couple of things. I like an industry group moving higher. That's a big favorite of mine. I use a lot of scans. So one of the scans I like to run is an industry group scan with either the weekly stochastic turning up or the weekly PPO turning up and giving me a cross signal. I prefer, if I'm especially in the commodity space where I trade a lot, I prefer to find a long downtrend on the momentum indicators like the PPO changing and all of a sudden starting to move higher, breaking out of that pattern. So if the weekly's doing that, and then I go to the stocks and they're starting to break out. So as an example, if I'm looking at the gold stocks now, I'm starting to look for gold names that are really outperforming. I took one that had more volume, so I took Agnico Eagle, but there's little ones like Go Gold Resources that is pushing to higher highs here while gold hasn't broken out yet. So it's stuff like that that I would like to look at. The other thing I always like to scan is, what sectors are breaking out. So in this case, the consumer discretionary has just made a nice push. So then I want to start looking, that's retail time of year. I'm starting to see Etsy. All of that lines up to me to just say, maybe try and get long there. But yeah, I do all my scans on weekly and then try to go back to the daily and find some setups I like.
Gotcha. So sort of zeroing in sectors and industries down into the weekly and the daily as well. I love what you're talking about there, Greg. Mark, let's jump over to you. What's your process for finding some of these names? Is it just kind of chart review? Are you running scans? What are you using?
I do a little bit of combination of both, Grayson.
Okay.
Similar to Greg, I mean, I definitely like to find sectors that are showing above average strength. And, recently some of the stocks within insurance sector just recently broke out and what's happening with financial technology. But yeah, I try to keep a list of stocks that are all hitting new 52-week highs. And yes, there is some subjectivity that comes into that because not all stocks that are the strongest are going to be the ones that I feel are good risk rewards.
Sure.
I do like to find ones that are, stalling a little bit and making large cup and handle type patterns or formations where they're basing and then starting to move higher. So it is more about risk reward than just finding the absolute strongest names. But sometimes, we all kick ourselves. You look back and you see the ones that we didn't want to, as they say, well, sometimes when the horse runs out of the barn, you have to chase it because it's not coming back. And so, strength begets strength, and weakness is typically something to avoid. So, it's a number of different personal scans that I do that involve several different disciplines, I would add, but it's not traditionally just looking for crossovers or, breakouts of certain moving averages of sorts. It's more, it takes my own subject of look.
Gotcha. That makes sense. Jay, I want to make sure we hit you too. What is your process for finding some of these? I mean, your group is a little bit different because you've picked a whole bunch of ETFs, which I love. Yeah. What's your process for finding some of these names?
The process is always evolving. As I have changed within the industry, I used to look at the trending names. I used to look at the hot stocks and then just throw up charts and day trade them. That was, how things were. But no, it's always starts with a top-down approach. And not that you're paying me to say this, but I do use StockCharts.com, and you have an amazing candle glance. When you look at the 11 ETF sectors with the S&P 500, you can hit candle glance. I don't know if you can do it right now, but sure. It's one thing. I have it printed out in front of me. Go. This is the cheat sheet. This is the cheat code for me. You want to see what's trending, what's moving, and then what we did here when we talked about specific ETFs. What are the largest, indicators in communications, the XLC? You see it's been down recently. Well, why is that? Well, Facebook and Google are your top two components going in different directions, but you want to take an approach from the 10,000 foot level and then move it down. And then when I see things breaking out on a smaller time frame, if I'm a longer term investor, all right, let's see where it's been, where it's come from, and that'll give me more of a targeting approach as to how far it could run. But like Mark said, we always look for those, long-term trends. Right now, like I said, when we started, the mid caps, the small caps, the Russell, they've gone sideways for months, 10 months now, and they're just starting to break out. Those are the areas that I want to see. And you then have defined risk reward. So you go top down, but yes, I'll always look at MACD crossovers. I'll go to my VWAP charts when I'm really getting active on a trade. But, this smart technician takes it from the high level and then works their way down. That's how I think you're going to get the best perspective on everything you do.
I couldn't agree more, and I love that I'm hearing that reflected in what all three of you are saying. I mean, when I think of the three of you too, I think of guys that just look at so many charts, so many different corners of the markets, and bring such a structured analytical approach to it. But starting at that high level, drilling down into some of the sectors, some of the industries, some of the groups that are really outperforming makes a ton of sense. Now, specifically on that topic, we've got our sector ETFs up here on the screen. If I flip back to our specific holdings, I know we did have a number of ETFs in there. We did also have Ethereum from Mark. So Jay, you're kind of absent in this discussion, but one thing that I did want to ask you guys, when I think about the sectors of the market, we're actually going to pull up this US sectors list, put that in summary view, and I'm going to sort this by the scooter rank, which Greg was touching on earlier. When I think about the sectors of the market, again, this is telling us kind of what the strongest areas are from a technical perspective. Energy obviously has had quite a run in 2021, has been one of the strongest sectors, but that is notably absent from the opportunities that we brought to the table here today. Greg, maybe we could go back to you because I know you feel strongly about the strength out of energy. Why was that absent for you? Real estate also another one that's kind of absent here, has actually had quite a strong run. But Greg, why was energy absent for you?
I'm sure everybody's amazed energy was absent. I've been pounding the table on energy stocks on every stock chart show this year. It has literally been a drumbeat that has gone higher and higher, and I continue to like it. The only thing that I'm starting to notice is we've been 10 weeks going almost straight up. And as we come out of that run, I'm expecting these stocks to pause. And so a little bit hard to start pointing out, buy points after they've moved up 25% in 10 weeks. So I'm looking for some sort of a pullback into January or late December, and I want to be all over adding to that energy carpet again. But like at some point in the year, I was at 3/4 of my portfolio was in energy. I was just hammering the table. I don't think it's the time to hammer the table now. I'm starting to see some movement in the corn, wheat, soybean areas of ag. So maybe you go over into the ag names, maybe the gold and silver names. I particularly am watching that closely for a base. If we're going to hit inflation, typically gold's a good place to play. So I structure it around that, but my big focus for kicking out energy isn't that I don't love it. It's that it's run so far, I just can't tell somebody to go add to it today.
Yeah, that makes sense. Mark, Jay, what are you guys thinking? Energy, real estate, anything that you considered in those spaces, or were they sort of left out intentionally? How do you feel about that sector?
Mark, I'll let you go first.
Yeah, I just want to say we only, came up with 4 different holdings as long. So I think if we were to have 30, I would certainly have a lot of energy names. It wasn't that we're specifically trying to avoid energy per se. It's, similar to what Greg said. I think that, my expertise, I think, comes from trying to catch the meat of the move. And if you're getting a bit extended in some of these groups that are already the highest of high, then, they just don't, when I look at different things like the mark signals or, if something is very, very, very extended above a base, it wouldn't be in my top 4 necessarily. And so I think the parts of energy are actually a little bit more appealing now when you look at solar energy that's starting to really come back, and even some of the integrated names that had initially lagged are now starting to make decent comebacks, and things like Exxon and Chevron, which had not initially participated. So, for those that are looking at the group, I just think we could see a little bit of a rotation where you see some of the laggards start to play catch up. And for those that are looking out 4 to 6 weeks, that might be a better area to look in energy versus buying all the E&Ps and the ones that are stretched, with crude likely heading into probably a seasonal type pullback in the next month or two. So,
Jay, anything resonate with you there?
Yeah, well, you look at those energy charts and they're sexy and they look great. But, when we come into a program like this, we're looking for actionable ideas based on people's time frame. And to me, the time frame is 3 to 6 months when we're looking at the charts that we put up today. If we wanted to do a day trading show, then maybe we'd be talking about it. Then energy is also scary because we have earnings in the big 3, Phillips, Chevron, and ExxonMobil at the end of the week. So when you come on these shows and then earnings come on, it could really throw up your narrative and change how we look at the chart. So sure. That's why we avoided energy. I did look at TAN. TAN was an interesting one, the solar ETF. Not interesting enough for me to put in my top 5, but also interesting. And then you want to look at what's hot right now. Utilities have been on a tear. I know they're down towards the bottom of the list here, but they've made a tremendous run, and they could continue to be strong as we head into year end. But when you talk about utilities, you tend to put people to sleep. These aren't the big names that you'll talk about over Thanksgiving. They're not going to ask you how American Water is doing. So you want to pick something that people know that is, actionable. And, so if I came on here talking about utilities and, hey, Coca-Cola is starting to make a move here, these you have to kind of balance it. So that's the honest answer as to why you avoid certain things.
Yeah. Guys, we're getting low on time. I do want to touch on the market overall, though. And I know we had some fantastic discussion as we were setting up for the show about kind of some of the things that are happening in this market. So I want to make sure that we hear from each of you as experts in this industry on just kind of how you're feeling about this market overall. What stands out to you? Maybe what even is keeping you up at night about this market, if anything. But I'd love to just kind of run through, take a minute or two and just talk about kind of how you're feeling about this market overall. I know it's a broad question, but an important one, of course. Greg, maybe we start with you. We'll go back to you.
Sure. So just the newsletter I write every weekend, the comment I made this weekend was I'm somewhat flummoxed at some of the market action this week. And I have lots of breadth indicators, the McClellan oscillators, my own indexes, advanced decline, all that kind of stuff, showing me to stay involved, stay in the market. What I can't make sense of is a whole bunch of tech stocks starting to roll over. The advanced decline on the NASDAQ a little bit weaker than I would like. It made its highs last February, so starting to get long in the tooth on that decline. But as I look at the market, I still want to be involved, but I'm starting to notice commodities seem to be running up against a wall. And so I'm a little bit hesitant to add to oils or steel or copper here. I tried a couple of weeks ago and then just got stopped out after they made a nice move. So I'm hesitant to try and figure out why the market is struggling. And I listed off 6 tech stocks this morning that just seem to have hit a resistance and are rolling over again. So I'm trying to place it all together. We didn't. So in general, I'm starting to get a little uncomfortable that the market's having trouble going through the prior highs, and that can happen. It could take a week or two. So at this point, I'm getting a little concerned that the market doesn't have the energy to go higher, but I still got a lot of trades on. So I'm waiting for, if I get kicked out, fine. But for the most part, my indicators are all bullish. I'm just starting to notice that some of the stocks are lagging and rolling over before the indexes do.
Gotcha. So cautiously involved is kind of what I'm hearing from Greg. Jay, I want to switch up the order here and give you a chance to answer as well. How are you feeling about this market overall? What stands out? What keeps you up at night? What do you want to say to our viewers here about the total market?
Well, I'm not losing sleep over this market, that's for sure. For the Dow theorists, they're loving this market. The transport's finally caught up, and you got the Dow and the transport's making new highs. This is not a bearish indicator. You look at the indexes that have lagged. There have been pockets of bear markets within this, this last 6 to 9 month cycle. Stocks have corrected 10 to 20% individually. Some corrected close to 50%. So seeing the small caps and the mid caps finally catch up and about to break out or currently breaking out, it's hard not to be overly enthusiastic. I try to temper my enthusiasm, and then you throw in the seasonal factors on top of it. I am very optimistic that we'll have a strong run into year end. You try to put on earmuffs. You try not to listen to all the news, because we went through this exact same thing last year. It wasn't inflationary concerns, but there were political concerns. There were all sorts of other, worries about where we were going with COVID. Now it's inflationary concerns. Jack Dorsey's talking about hyperinflation. We have gas prices at the pump that are destroying us. I don't know how they are in Canada, Greg, but I know down here in the States, it's not fun. So these are troubling things, but the market continues to grind higher, and I'm a follower of price. I'm a follower of the trends, and the trends are telling me we're going higher.
Follower of price. That was pretty bullish there from Jay. I like that. Mark, I want to give you an opportunity to answer as well. I know you had some thoughts before the show. What stands out to you about the current market climate?
Well, I think, as with everything, there remains both pros and cons to how we look at the market. I mean, when you strip out technology's influence, equity markets in the U.S. have been largely sideways now for about 5 months. And so I'm encouraged to see groups like transports and discretionary start to move back to new highs. Those are good things. So I would argue that, as for positives, short-term momentum improvement and short-term breadth improvement are both positives. Seasonality is certainly a positive in 4Q. Sentiment arguably is still sort of skittish. That's also a positive for stocks. And also the fact that we have very little evidence of true strength in defensive groups, and also junk yields are really under control. We haven't seen high yield falling apart. As for the negatives, I think you'd have to mention that weekly momentum is certainly a concern across all U.S. markets. And that's something that continues to be an issue with regards to now some negative divergence, with the main indices pushing up, but yet momentum on a weekly basis really hasn't followed suit. I would also say that a lot of the market cycles I look at have the potential to peak out in the month of December, and we could have sort of a rough 2022, which would arguably fit in with a lot of the 4-year cycles, and really the weakest part of the presidential cycle between post-election year and midterms. And so there's a few things that suggest we could be weak next year. Finally, I think the fact that not all indices globally are moving in the same direction. We saw China peak out in February, And much of the Far East, as well as Europe, has not been nearly as strong as the US. And I think over time, we look at prior market peaks from 2000, be it 2007, these all tend to usually, peak out right around the same time and decline. And now we're seeing pretty big divergence now, with only the US hitting new highs, and really the rest of the world does not seem to be the case. So I'm cautiously bullish into December. I think it's going to be a choppy ride. It's not going to be straight higher. I do see, 5 to 7% potentially on the upside, but I think we have to be a little bit more careful if we start to see sentiment increasing substantially on any sort of rally.
A bit of more of a cautious view, but I love all the points that you're touching on there, Mark. And specifically some of the weakness that we've seen kind of out of the rest of the world. I mean, we're looking at a chart now that's basically the total world minus the US, really just kind of drifting sideways for quite some time. I love everything that all of you are talking about. I wish that we had another hour to dig into every corner of the market and really kind of fly through everything. But unfortunately, we are out of time. I want to thank you all, though, for joining us on today's show. This was, really, this show is made by you guys showing up with great ideas, great charts, and great insights into your process and how you're finding opportunities in the market. So I want to thank you for making this show possible. You viewers have been watching Greg Schnell, Chief Market Strategist at gregschnell.com, Jay Woods, Chief Market Strategist at DriveWealth, and Mark Newton, Managing Director and Global Head of Technical Strategy at Fundstrat. I want to thank you three again for being with us today. I want to thank you viewers for making this show possible. Remember that we do the pitch every month. This is a monthly show on the channel that we do a different host typically every month, and 3 new presenters bringing 5 of their top ideas for the current market to the table. As you saw today, really digging into the charts, digging into their process, digging into corners of the market that they're finding strength in, or as we did today, even some short opportunities in there as well. So always something new here on this show. Viewers, I hope that you will join us next month for another edition of The Pitch. My name is Grayson Roze, Vice President of Operations here at StockCharts. Thank you again for joining us. We will be back with you very soon. Jay, Greg, Mark, thank you again. And until next time, chart on, my friends.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.